Hi there, Kristen Cooper, your certified mortgage planning specialist with Finance of America. I wanted to take a minute and go over this presentation. I think that a lot of people just don't realize the beneficial financial gain that you can get from purchasing a home. So I want to go over the numbers. The reason that we typically purchase a home is, for security for our family when we have kids, but also for financial benefits. And what does that look like? So we're going to walk through just a basic scenarios. If we were to purchase a home, we'll just say in Sacramento County at $400,000 versus renting, what would that look like? If you have any specific questions, please reach out to me. I'd be more happy to answer them specifically for you. So what we want to do is look at a basic scenario. This is just based on $400,000. We'll say an interest rate of 4%, putting as low as 10% down. We do have programs where you can put less down, but just for comparisons, we'll just do a basic 10% down, $400,000 purchase. So we'd be looking at here in monthly payments. You could see about $1,719. That's principal and interest. Principal and interest is the portion that you make to the bank for 30 years to pay off your loan, and the interest portion to borrow the money. Estimated property taxes based on 1.25% of the purchase price, as well as you're looking at your insurance included in that, which is your monthly hazard fire insurance you have to carry when you own a home and have a loan on it. So again, it's going to include your property taxes, insurance in this amount, plus your principal and interest. Now, maintenance and repairs, you aren't going to have, unless you have HOA, you would have to add that additionally on here. But I wanted to include $166 just for comparisons purposes, because I think a lot of times we're concerned when we purchase a home, well, there's going to be maintenance on the home. So there's an actual numbers that came out that said, when you own a home, what would that equate to on a monthly basis for just basic repairs that you would need to anticipate for in a home? So let's just say it's going to be $166 a month in repairs on average that you're going to have to do to the home. Now, of course, you're going to go a long time without needing anything, and then it would be a bigger amount, but just for average. I always want to use worst case scenario and make sure that you have the numbers in here so that it's realistic to compare. Now, we want to look at what that's going to look like versus what renting is going to look like. So if you look at the next graph here, in year one, you're going to be paying for this same home. You would be renting about $21.25. It's actually higher, but we'll go off what they have here. So let's say $21.25, and then you carry homeowners insurance. Let's say that's $32 a month. So you're going to be looking at paying about $21.57. Now, annual rent increases in Sacramento County right now is 4.7%, meaning every year your rent's going to go up 4.7%. So that's what we want to look at as well when we're looking at the comparisons between them. So in year one, you can see your mortgage, and then you could see, now keep in mind, 166 of that is for maintenance and repairs. You're going to also have next to this here, you could see that yes, it would be cheaper to rent this home in this case for year one. Also in year two, also in year three. Well, you can see here now in year four, it's almost the same amount in the payment that you're going to be making when you're renting versus where, owning a home. So we want to see here, that's kind of our break-even point is just after the fourth year. You can see now it goes up to where it's more expensive to rent than it would have been to purchase the home where we're at. So you can see the accumulation cycle of, yes, if you plan on moving in the next year or two, it wouldn't be, smart to purchase a home and sell it. And here's why. We have to take into consideration a lot of factors when we're looking at this. So your cash flow difference here, you can see $8,552. So it's just showing you the difference between your cash flow from buying in 9 years versus in renting in 9 years. That's just monthly cash flow that you're saving in 9 years for owning a home. Now we got to also look at appreciation gain. Well, in Sacramento County, the forecasted appreciation is 6.31%, and this is over 9 years. So 6.31 times 9 years in appreciation, that means now your value of $400,000 goes up to $694,000 in 9 years based on this appreciation rate. And we look at amortization. Amortization says my original loan was $360,000, but now after 9 years of making payments, I only owe $292,000. So now I have $67,296 in equity on top of my appreciation that I have in this property after year 9. Now, we always want to compare total cost. I'm always going to look at your total cost analysis. So let's say that you sell the home in 9 years. That's 6%. So that means you're going to have to pay $41,000 in commissions to sell your home. Well, now your home value is $694,000. So that's where we get the $41,000 that you would have to pay 6% in commissions. So then we want to look at do you have a tax benefit? Well, as a lot of people are not aware, the tax law changed to where now you get a standard deduction for married. So in this case, if you're married at a 22% tax bracket, there is no tax benefit deduction because you're taking the standard deduction. So we're not even using that in the equation. So even without the tax benefit, you could see your net gain by buying a home on year 9 is $320,232. And you could see here, we want to take the total amount. So how did we get to this number? Well, we're going to take your amortization and your appreciation gains that you have here, and then we're going to deduct the expenses. So the initial closing cost of purchasing the home, and then we're going to deduct out the cost to sell. So in the end of 9 years, based on where appreciation rates are going, you can see here, net gain of purchasing a home, $320,000 versus when you rent a home, you're going to be giving away, you can see here, $272,000 in 9 years of money to your landlord's mortgage. So when we look at, does it make sense to purchase a home? This is one of the biggest factors that you really need to be looking at, on top of the fact of security and not being kicked out of your home and being able to have dogs. A lot of places now you can't even rent anywhere if you have animals and dogs, which is a big factor to consider. But looking at the financial benefit here, there's no other way that you're going to build as much net worth versus purchasing a home. So I'd love to go over your specific details. Give me a call. Again, Kristen Cooper, Certified Mortgage Planning Specialist, KristenLoans.com, KristenLoans.com. Hope you have a great day.